spend a lot of time trying to match performance reports between trading platforms such as Tradestation and NinjaTrader. And you see, we're taking a look at Crude Oil Weekly Inventories, and here is the report from NinjaTrader and the report from Tradestation on Crude Oil Weekly Inventories over the same time frame. You see about a $5,000 difference. And then total net profit, the drawdown is 45.10 here, and at Tradestation it is 45.20. It's based on the closed trade drawdown in NinjaTrader. So I'm going to take a look at a trade on this date, which is September the 14th, and give you an analysis and a case study of why it does that, why is there different performance reports, and what the difference is, and how could we match them. So Tradestation, you see the first trade is 47.42, and it gets along here, and then it comes along and gets stopped out, market reverses, then you get short at 46.82, and it goes on to hit its profit target. So you see the profit target over here on this time frame, and we're looking at 1 minute charts. In Tradestation you can back test, look inside bar for 1 minute, or you can go down to 1 second or lower, 1 tick. But you can only get 6 months of data, so you're back testing your strategy that's longer than 6 months. It's hard to do that. It takes up a lot of memory, and if you go back for 1 second or 1 tick data for very long, it can be memory intensive on your computer, and it may crash it. So we are already looking at 1 minute charts, and the reason I say this is because the range of this bar is higher than the stop loss. So how do we know what happened inside this bar? We went down, we got here, and we don't know what went on inside this bar. Most of the time there's a bit of a retracement, but there's not a 100% retracement or a 70 or 80 or 90% retracement that would have caused us to have a stop loss. It would have had to retrace 30 points, which would be 47.12, and the high on this bar was 47.20, and so it had to retrace up to here. It did not do that on that day in real trading, but that is where the difference between the platforms comes in, because on NinjaTrader it automatically assumes that we were stopped out in the back test, because it assumes 100% retracement within that bar. And so got in at the same price so initially, got stopped out, same price, got in on the second trade, assumed it stopped out, got in on the next bar, and then it went and hit its profit target. And so you see one additional trade that was a $300 loser. So there's a $300 difference between these two platforms based on this fact that there's a 100% assumption. So that's a worst case scenario. That doesn't always happen, but we can set up the same report in Tradestation just to see if the code matches pretty closely. And so that's what I'm going to do. The way you do that in Tradestation is you go to View, and you go to Chart Analysis Preferences, and there's a setting under the Strategy tab called % Increment for Bouncing Ticks. And basically it's the amount of retracement within the bar. And if you put 100% in there, you'll get it to do the same thing that NinjaTrader does. And so I'm going to put 100% in there, and then I'm going to have to refresh the strategy, turn the status off and on. These are different ones I'm testing, and this is the current one that we're running, and these are other tests that I've been testing. And the only difference between this one and the one we're running is that it requires the market position to be flat, which is what you have to do in NinjaTrader as well. Even though we're still running this one, we wanted to make that one little change to see how closely we could match NinjaTrader. So we did that one change, and the results are still pretty close. So I'm waiting for that to update, and now you see the same sort of scenario. It stopped out on that bar, and then it got back in. And so the results are here, and in NinjaTrader you see the results here. And so if we set the bouncing ticks and require the market position to be 0, which means it can't get it out and in on the same bar, but the next bar, you get only a $700 difference. There's 183 trades versus 186. So it's real close. Let's set this to currency again so you can see the average trade profit, about $6 difference. And so again, didn't use any slippage and commission because you want to be able to compare the platforms, see if the code matches. And so pretty close. I just dig a little deeper to see why these last few trades are still slightly different, but it's good enough for me at this point. and I have to know that when automating in Tradestation or in NinjaTrader that you can get trades in real time that will not get stopped out or it would have in the back test based on this. And so that's the update on nuances and balancing ticks for back testing and differences between trading platforms.